It's about that time of day again here, boys and girls. Welcome back. Welcome back. Newsletter time. JJ here. It is Thursday evening, January 8th, 2015. Welcome back to your nightly newsletter. We have a very, very important newsletter for you guys and gals this evening. Incredible volatility this week, but we've got a very consistent scenario here across the board. We're dealing with very obvious trading ranges, and we're going into a very, very big news report tomorrow morning. If you haven't been paying attention, tomorrow is non-farm payroll Friday. So we've got a lot to talk about here this evening. Before we get started, though, I do want to apologize for missing the newsletter last night. Had a little bit of an urgent situation that came up here just outside of the office here in our corporate headquarters, so I apologize for not being here last night on the newsletter. As always, of course, I was here all day yesterday with our clients here at School of Trade. Had a fantastic day. Hopefully you guys had a great Thursday here. Now, before we jump into charts, let's make sure you guys are watching this video right now on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube page, there is a link right below the video in the description that will take you over here to the blog. 3 reasons why you should be watching this video on the blog tonight. First reason, you can download all of my charts right below tonight's video, right? You can download all the charts. Second thing, I've got a great free pass for you to come out and join us in our live trade room as a trial member. Maybe you're wondering what it feels like to be in our trade room, right? Maybe you're curious. How do we use these newsletter levels every day to make profit in our live trade room with our students? Well, I got a free pass for you, and I'll show you exactly what we're all about here at School of Trade. And then the third thing is, lower left-hand corner, right above my ugly mug, we have a special email list just for our nightly newsletter. That way you never have to worry about missing another newsletter again. Alrighty? Now, if you grab your free pass, or if you register for the newsletter, I am going to send you a verification email to make sure that I have the right email address, and also to make sure that you give me approval to keep emailing you in the future. So make sure you check your junk mail, spam folders, if you haven't received email from us in the past. All right, guys? Looking good. Looking good. Thursday evening, January 8th. Let's rock and roll. We got a big day ahead of us tomorrow, and we'll start here this evening with that very mighty mini Russell. Now, let's bring us up to speed, right? We didn't talk last night on the newsletter. So if you recall, on Tuesday evening, we talked about this overshoot, right? We had that channel overshoot, and my exact words on Tuesday evening was that this overshoot would result in a larger than usual correction. And that's exactly what happened, right? Pretty crazy how that momentum swings so far in both directions, right? Welcome to 2015. It's going to be crazy like this all year, most likely. It's very, very nice for us day traders. So again, just as expected, the overshoot of the bear channel resulted in a much larger correction than what was typical. Now, we are still bearish on our 32 anchor chart right now. So bottom line, I've said this probably thousands of times before on this newsletter, anybody can put together a one-day rally, right? Anybody can put together a 2-day rally. But the reality is that until we pull back and then go higher again, this is just some funny business pushing higher, right? This is just getting us into a good chance to sell here. Maybe we're going to 12 under the big round number. Tough to say, right? But in my humble opinion, as we're going lower here, this is just a retracement off that low. Now, this becomes a reversal once we do make a low, right, and then go back again. It becomes a reversal once these buyers prove that they actually are, they get a little more strength than just a 1.5 day rally, okay? So I'm not bullish just yet. I won't be bullish until we pull back, for example, to the 1170 area there, and then go higher for a second leg up, right? Once we see this move lower and then another move higher, now I'll go out, draw my trend lines, right? And this is where we'll start to call this bullish. So we're not there yet. Okay, as far as I'm concerned, the Russell has put us in a great spot here right now to be a seller. Oops, sorry for the snowstorm there. So we know that we've got a bearish environment on our hands right now. If I have to, I will sell that 1204.7, 1211.9, and with non-farm payrolls tomorrow, we may get a little spike up there, right, for a great little fade right back down. Looking to be a seller though right now. Really, I'm looking for that weakness from those buyers. Ultimately, I'd love to see a couple buying patterns fail up near these highs. Give me some confidence, right, that we're going to roll over here and then find that entry trigger, right, on the way down. That's the most important part, right? Because if you're wondering, as this price kept going higher here, how are we getting into these trades? We're waiting for a specific entry trigger, right? And you can see we haven't got the entry trigger yet. So we're still waiting for those buyers to start to tire out. Sellers can kind of grab hold of it and bring this thing down here. So we're looking good for a short, and then we got targets on the way down at the green lines below you, right? So we'll definitely be looking for some great selling opportunities. Again, you're going to hear this a lot out of me this evening. Tomorrow is non-farm payroll Friday, so it's really a very big variable to see where we go from here. I don't think we're quite, again, we're not bullish yet. But that may change tomorrow if we do see it pull back and continue higher. Okay, so I'll be watching that live in real time tomorrow with all of our students here at School of Trade. Come out and join us. Next up here, from our 32 to our 16 anchor chart here on the mighty Russell. Now this is where we really start to see, okay, yes, we are definitely well overcooked to the upside, right? Just a simple extension here, A, B, C, and we are well overcooked here to the upside, right? I don't really like the word overbought. I like the word irrational, right? That's kind of the better way to describe it, right? The most commonly used term would be overbought, but I personally would rather say we are a bit irrational. And again, a lot of that I think is coming from that overshoot that we saw on Tuesday. Right, that just irrational move lower. Again, the pendulum swings all the way back in the opposite direction. Okay, so Russell is quote unquote overbought at this time, irrationally bullish, if you ask my opinion. And look at this wide open space all the way back down. Right, I mean we literally are, you know, a bit of a triangle here, right? Bit of a trading range. You'll see more of that in the next chart. But basically at this point though, we got this big zone here, this range of resistance here overhead, and that resistance kind of range, again, tomorrow non-farm payrolls, we may see it jump up, right, and then come back down. But again, the bottom line is we are, in my opinion, these buyers are dead men walking right now. It's going to be tough to sustain. Again, tomorrow's non-farm payrolls, so with that news coming out, we may see a rally off that news, but it's going to be tough to keep it up like that, right? We'll see what happens tomorrow. Bottom line is, though, right now we have a little triangle going on right now, so I would definitely be looking for a breakout retrace, right? That's one option, right? Because you pretty much get a range here right now. That's pretty much your range right there. So once we start seeing trading ranges like this, and remember, that's exactly what I said earlier, you're going to see this as a common theme tonight on this newsletter, and that is trading ranges. And when I say trading ranges, if you're a member here at SchoolOfTrade.com, you know, think breakout strategy, right? So we got the trading range. I'm thinking, okay, what's my options here? If price goes up, breakout trap, breakout fade. If price goes down, breakout retrace, okay? And then we got targets waiting for us below, 85, 79, 76, 70.7. Okay, I would expect though the final result to be down. If we do get this to reverse here, I would expect us that 70.7 area, just because you can see, look at this area right here, right? I mean, it's just, you can tell there's a lot of interest, a lot of business being done in that area. So that would be a definite target, but you've got a little bit of support there in your way at that 76.5, and you can see that trend line drawn up as well. So that'll definitely be a spot for a target. But if my gut's correct on this one, I would say we're back to 1170 here. Again, tomorrow's non-farm payrolls. We will have to wait and see what we get. Now, speaking of trading ranges, finishing up here on the mighty Russell with price action. Here we have a very interesting scenario, and this is one of the cool parts of being a trader is you can look at different types of charts, right? Here's a tick chart. Before those were JJ charts. So These are going to have variable open, high, low, close levels. I don't use a lot of indicators on this. I just got one simple moving average. We are reading the price action, right? We are reading the actual price action on these charts. And so first of all, you can see here, we got this big bull channel. Okay, there's no question at all that we are bullish here in the short term. Right? You can see the date at the bottom here. This is only one day, right? So we're zoomed in a lot further right now. So we're bullish in the short term on this price action chart. This is a 1400 tick chart. On top of that, you can also see this spike and channel that then turns into a trading range. Okay? Now, let's talk about this for a second. What do we know about a channel like this? What do we know about a bull channel? Buy the lows, right? Buy the lows of a bull channel. So we know there's going to be a chance here to get some buyers going on at these lows. Okay? Very important. That's the first thing. The second thing we should be looking at here is that spike in channel. Now, we know that a spike in channel, when it fails, it usually returns back to the beginning of the spike. Okay? So we're, combining this with the other time frames we've looked at. If we do get that oops-a-daisy and the collapse, now we know where it's going to go to. Okay? So we have a good looking target here for all of us sellers tomorrow if we get the chance. 1170.2. Now remember, that lines up right with that 70.7 that I was just talking about, right? So we're starting to see this all come together here now. So the target for the sellers tomorrow and into Monday here will be the beginning of the spike in channel, right? The beginning of a spike, right? So spike up, channel, 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 right? And then typically what will happen is it'll overshoot and then collapse, okay? So now we know where our target is. Now let's plan our entry. The last thing we need to focus on is this trading range. This trading range, very, very important. Whenever I say trading range, you should be thinking breakouts, right? So I know that I'm bullish in the long term. So I want to first start by thinking, bullish in the short term. I don't want to confuse you guys. Okay? On this chart, you're bullish. We know, though, in the big picture, if these bulls don't make this happen, those bears are going to take this thing all the way back down, and we think it's going to go to that 1170.2. Okay? So first of all, let's plan if the bulls take control tomorrow. What's my options? Buy, right? Where can I buy? Buy the low of the range, right? Breakout trap. Buy the low of that channel. Easy. What's my second option? We break to a new high, right? Breakout pullback. Target 1200, big round number. Easy. Okay, so we really got two basic options right now to be a buyer. Now, what if we cannot get these buyers to move, right? I would not be surprised at all if we jump up after non-farm payrolls and then make a run for it, right, to these lows. Now, I've got my kind of swing low right here, right? And I'll go out, break out, retrace. Okay? So most important thing right now in this chart, there are two very important clues. The first clue, which I think is the most important here, is going to be that channel. The channel tells us what to err on the side of caution for, right? So the channel tells us be looking for that buying opportunity if we jump up. Okay? We know what the long term says, but remember, we're scalpers, we're day traders here. We're going to follow that short-term trend until that starts to fail. Okay? If we start seeing buyers fail on this, then we know we're in for the short. The second thing now is going to be this trading range. In my opinion, the trading range is what you're going to use to know where to be trading. Okay? The channel tells you what direction in the short term. The range tells you where to be looking for that trade. And then last but not least, we get some targets. Third thing, buyer target 1200, seller target 1170. Okay? So now we know what our plan is here for the Russell. As always, come on and see me tomorrow. We'll go into a lot more detail with you guys as students here at School of Trade. Next up here, from that mighty mini Russell to this funny yellow metal they call gold futures. Now, I didn't think they were going to make it this easy on us, but you can see that sell zone did actually hold, and we are headed back to 1200 now. Surprise, surprise. Yeah, this is pretty much the same chart I had last time, and the time before that, and the time before that, right? Not a lot has changed in this chart. Okay, we're trading around $1,200 per ounce. We're inside a consolidation range. It's a wedge, and we know we're going to keep selling those highs and keep buying those lows. So earlier this week, we talked about selling those highs, and that's exactly what happened. Okay, now we're really not in a very good position right now to get long or short in the long term, right? If you're a long-term seller, you want to wait to sell those highs like we gave you earlier this week. If you're a long-term buyer, you want to buy these lows. So right now, those long-term traders, well, you should have already gotten short off that high, and you should be holding now down to that 1,200. How about those short-term traders, right? How about us scalpers? How about us day traders out there? Well, here we have a very good look here, right? Let's zoom out a little bit here. We can see we got this bullish channel, okay? Very simple there. Nice, easy bullish channel. And we looked at the volume earlier this week, and we saw that the volume had basically quit on us, and so we knew that the party was most likely over to the upside. We combined that with being at the top of the range, and it gave us a really easy clue that we should no longer be buying and be starting to sell, right? We talked about that on Monday and Tuesday this week. Now here we are. And again, that same theme again, trading ranges. So here we go now. We have a downward trending channel, right? And this downward trending channel, you can see what happens, right? We break the channel. So immediately we think we're most likely you're going to retest these lows. So we're definitely bearish right now on gold, okay? Whether we like it or not, we're definitely bearish. So the channel, again, if you're a student of mine, you know what I'm talking about here, right? We break that channel, we're probably going to go retest those lows. Okay, so we're definitely bearish. The next thing here is we can easily see a triple top, right? And I guess we'll call it a triple bottom, right? So there is a trading range, a very easy to see trading range. Flat moving averages, double tops, double bottoms. We have a triple top, triple bottom here right now. So we have a trading range. Okay, very, very easy. And then, of course, you've got your big round number here at 1,200, right? That'll be an easy magnet for price. Okay? So, what's my direction? Bearish. I want to sell. What else can I do here? I've got a trading range. Remember, when I say trading range, you think breakouts. Okay? 5 different ways we can trade breakouts. Here are 3 examples of them. If we happen to jump up, breakout, fade, right? Sell those highs. If we go up to the highs and don't break out, trap, right? Trapping those buyers. Again, if you're a student of mine, you should know exactly what I'm talking about when I say a breakout trap, breakout fade. Then what I would assume happens is we get back to that low, again, because we should retest that low. We should be seeing 1205.5. Then we make a new lower low, and we have a breakout retrace. On the way down, if you take that breakout retracement short, don't forget, take some profit off of 1,200, right? It's a big price magnet. Then you've got seller targets here, 1194.2, right? 1195.3, 1186. I don't think we get down to 79s, but that will be a final target, right, if you want to go for the home run runner. All right, guys? So key components here right now, bearish short-term trend, sideways range. Okay, that trading range tells me look for breakouts. The direction is to the short side, and don't forget about that big old 1,200, right? It's gonna be tough to get away from it here right now on gold, as I've been saying for the past 3 or 4 weeks. Okay, next up, price action chart here on gold. Price action clearly bearish. We can see another example here, right, of this channel. Okay, so another easy example of a channel here. We're coming off the highs of that channel. Again, we should be gravitating towards those lows here, so we're staying bearish. And then, of course, you can see here, there's that triple top. There's that double bottom, right? You could extend it all the way back over here if you wanted to, but again, you see the point, right? So there's my range. Now, what I did on this one is I just kind of copied this trading range, right? Just kind of copied that trading range, and I just projected it down here. That's all I did, right? I'm kind of searching right now on this chart because there wasn't else much that we can use today. And because we have non-farm payrolls tomorrow, I want to give you guys a couple big targets here just in case we need them, right? Or in case we miss the short and we want to, trade the reversal off that 93.5. So I'm looking at a short here, right? Staying to the sell side right now, and I'm inside of a trading range. So naturally now we want to sell. I can sell the channel high. I can sell the high of the range. I can sell at resistance above the range, right? I can fade it short. I can trap it short. I can trade short off the channel low or channel high. If we go lower here, right, we get a breakout retrace, and again down to 1200, and we got 93.5. Just make sure you don't forget about the low of this channel, right? The low of that channel is right there. So again, careful around 1200. Remember, if you're trading gold right now, we do not want to be entering into trades around 1200. That is a big no-no, okay? Wait for price to get away from 1200 and then trade it back towards 1200, okay? Let's keep going here. Now, talking about the crude here. Okay, little bit of chop and slop here this week, right? We had that move lower right out the gate this week. And then Tuesday was a bullish day, no surprise there. And here Wednesday, right? Wednesday yesterday was a sideways day, and we saw the same thing again today, right? So we're definitely trading sideways here. Now, when you look at this chart, you can see here, there's no doubt about it. We are still long-term bearish, right? I mean, unless you've been living under a rock or at Pluto, right, for the last 6 months. I mean, we know we are trading at 48 stinking dollars a barrel right now. We are not bullish, I will tell you that much, right? So we're definitely leaning still on the bearish side, right? I'm not going to go overthinking this at all, okay? So we are bearish. I realize we're at 48. I understand we used to be at 100, but that doesn't mean we're bullish, right? I can't think like that. All I can do is what I can do. I can look at this chart and know we're bearish. So I'm going to keep riding this horse until the bulls take back control. So we know we're going to look for a short. But then we have this little channel here, right? And I'll tell you, there's a lot of people out there that keep calling my office, sending me emails, sending me Skype messages saying, are we buying yet? Are you long yet? And I said, why would I be long? Well, because look, we're getting some higher highs, some higher lows. Yeah, but my old friend Charles Dow, you know that guy, right? Our great-grandfather of westernized technical analysis. Yeah, well, he said it best. There are millions of explanations why price moves on low volume. There's only one explanation of why price moves on high volume. And right now, if you analyze those highs this week, you'll see we are not confirming higher. But wait, we do have a volume spike. Now, I don't use volume as much as you may think, right? I use volume to confirm ranges. I use volume to confirm a move. Okay, I am not that guy using those ridiculously complicated volume ladders you see plastered all over YouTube these days. Okay, by the way, the only people that use those complicated volume tools are the people who are selling them, right? Kind of weird how that works, huh? Okay, so volume is very important, but I'm not buying into all the complicated uses of volume, right? It can be very, very simple. Where do we get the most amount of volume? Oh, I don't know, maybe right there. Oh, you got to be kidding me. So we are literally right on top of $49 a barrel, and that's where the volume's coming from. So volume did not want to go higher as the price is going higher, but volume was getting, right, we saw a ton of volume right smack in the middle. Remember, volume is like a vote, right? So every time I see one contract of volume, that's like a vote for that price. So right now, the traders this week have voted that $49 a barrel is what they feel comfortable with. But we got higher highs. Okay, I get it. But volume is the most accurate clue I can use right now. Okay? So the volume tells me that we trade sideways. The technicals now, as you can see, again, mark the highs, mark the lows, and there's that reoccurring theme today, a trading range. Now, again, we're going into non-farm stinking payrolls tomorrow, right? I mean, this should not be a surprise. Markets get range-bound ahead of non-farm payrolls, ahead of FOMC, right? Ahead of these major impactful news events, right? Long-term impact news events. So we know we're going to keep looking for sells, right? We're going to continue to sell short, and we're looking for areas of resistance overhead. 50.52, 50.97, 52.23, 50, right? Okay, so we're going to look to be a seller. Remember, trading range, think breakouts, up, back down, right? So we're looking for a trap, we're looking for a fade, we're looking for a retrace going lower, right? A retrace going lower. We still have the potential to get down lower here tomorrow. Remember, tomorrow's non-farm payrolls. Right now, I'm keeping my eyes open for selling opportunities right now on crude. I'm not quite drinking the Kool-Aid yet about the buyers being in control here, okay? Last but not least here, well, shouldn't say last but not least, for the anchor charts here, 16 anchor, and you can see this is just another example of what we're talking about before. Okay, kind of the same chart here. We got that long-term downtrend. We do have these slightly bullish little nibbles here, right? We got some higher lows, we got some higher highs, but again, all the volume is piled up right in the middle here. Okay, so when I see this trading range, and remember, what's a good clue for trading ranges? Good clue, flat moving averages, big wicks, small bodies, right? Overlapping candlesticks, double tops, double bottoms. Bottom line is, when we're not making higher highs or lower lows, look for that trading range. So we have our trading range, and again, just like I said before, we got to be thinking breakouts, right? We're right here, right now, on top of that range high, breakout trap. We go higher up to 50, breakout fade. Up to 51, breakout fade. Okay, so stay to the downside right now. I'm telling you right now, though, anything can happen tomorrow for non-farm payrolls. Be a very exciting environment. We'll be trading crude in our trade room. Come out and see us. So look for those breakouts here. And last but not least here, finally last but not least, you've got our price action chart. On crude oil, pretty much the exact same scenario, except we found a measured move here, right, that we can use as a good-looking sell target. That's $45.57 right there. That's $45 a barrel right there as a possible seller's target for tomorrow. And look at that. The trap has already worked on this chart, right? The trap has already come into play here. So we're looking good as price goes higher, right? Sideways range, big wicks, flat moving averages, okay, double top, double bottoms. As we go higher, breakout trap short, breakout fades, right? Pretty much the same stuff that we saw on the other charts. And then again, I'm looking to sell short. We get a little bear channel, right? This bear channel tells me expect a revisit to that low, right? So we're looking for a target down here at 47.78, target at 47.03, and then dare I say 45.57 tomorrow morning for non-farm payrolls. All right, guys? That's the skinny here on crude oil futures. So we are range bound and bullish on the Russell short term, range bound and bearish on the gold, range bound and bearish on the crude, and again, be aware, tomorrow is non-farm payroll Friday. As always, come out and see me tomorrow morning. We'll open up our live trade room at 8 a.m. Eastern time. Don't forget, guys, we have the best free trial in the business. Don't believe me? I'll prove it to you. You're going to learn more in 1 week on my trial than you will anywhere else where you get to pay thousands of dollars for this information. All right? I am so confident in our abilities to turn new traders into successful professional traders that I'm going to show you exactly what I'm talking about in our free trial. So make sure you join our free trial. I'm going to send you an invite to come out and join my trade room as a guest. Okay, guys, don't forget, we're the longest running trade room on the planet. That's right. And if you can find one that's been doing it longer than us, I would love to know. Right? I would. I've been saying that for years now, but I never quite hear who else is out there, right? So we're the longest running trade room education site on the planet, period. Okay? I want to show you why we're the very best. 3 levels of membership. Somebody's standing by 24 hours a day, 7 days a week, 367 days a year. I know, I didn't say I was a math professor, right? They don't call me Professor JJ for nothing. All right, guys, join the trial. Come out and see us tomorrow in the trade room if you want real-time updates and real-time trade calls. My name is Joseph. Be well out there, boys and girls, right? Be well out there. Have a great weekend. Next newsletter will be Monday afternoon, and I'll see you guys tomorrow morning in the trade room, 8 a.m. Eastern time. If not, next Monday evening for our next newsletter. I do not do these on Fridays. Be well, and make sure you're on the right side of that market tomorrow. Come out and see me. Adios, amigos. Bye for now.